Okay, good afternoon, everybody. We just wanted to wait a couple of minutes to let a few more people join. And I think now is a good time to kick off. My name's Ben Thompson. I'm the founder and CEO of Employment Hero. It's a pleasure to have the opportunity to present to you today with a really important partner, Prospa. The reason for getting us all together today is because there's whilst we might come from very different sides of business, finance and employment, the thing that Prospa and Employment Hero have in common is a very deep respect for small and medium-sized business owners. And in my case at least, I've dedicated decades of my life in figuring out how can we help small business make employment easier and more rewarding, and offer more jobs. And I know that Beau from Prospa, Beau Bertoli, shares the same passion for helping small business. So it's a real privilege to be joined today by Beau, and who is the co-founder and chief revenue officer at Prospa. So welcome, Beau.
Oh, good day, Ben, and good afternoon to everyone. Great to be here, hopefully to share some insights into small business planning and cash flow management. Exactly.
So the topic of the presentation today is how to nail your business plan with limited or unpredictable cash flow. I'm sure there's plenty of people who are in that situation today. But let me just give you a bit of an introduction to Beau and explain his background. So Beau has 15 years worth of financial services experience. He has founded a technology startup, a very successful Australian success story, Prospa. He and his business partner, Greg, have built a business that's worth many hundreds of millions of dollars, and congratulations, mate. It's an inspiring story. Before that, Beau worked as the national sales manager for another listed financial services company, Flexi Group, which we were just talking before we kicked off, and both saying how much we admire Flexi Group for being so advanced, many before everybody else, but rarely gets the credit that they deserve. And Beau has also been recognised for his entrepreneurship and the work that he has done in financial services. He won the FinTech Leader of the Year award in 2017. And was also jointly awarded the New South Wales Piercy Tech Entrepreneur of the Year Special Recognition Award. So congratulations, mate. Again, good to see your hard work and forethought being recognised and rewarded. So maybe if I pass to you and you can sort of talk right up front about what it is that Prospa does and how you support small business. And then we've got about 6 questions that we wanted to step through. It should be quite laid back, and we'll sort of just walk through those. But let's kick off, and I'll hand to you to tell us about Prospa.
Yeah, sure. Thanks very much for that introduction there, Ben. And yeah, great to be here to share some insights from our journey here at Prospa. So at Prospa, we are just about to turn 8. So we've been trading now for just on 8 years. We started the business back in 2012 with a very simple premise. We wanted to change the way that small business owners were experiencing finance. And back then, the problem of accessing capital to run your business and grow your business was very pronounced. And in fact, in the environment we find ourselves in today in 2020, it's probably harder for a small business owner to find the capital they need to run and grow their business today than it was even 8 years ago. So Greg and I got together. The two of us have had small businesses between us, 5 different businesses, in fact, and we wanted to change the way that it worked. And historically, a business owner would have to pull together many years of financial reports. They'd have to go to their accountant, fill out 16-page application forms. Often it's a very manual process. And we wanted to digitize the whole thing and really make it very simple and fast for a small business owner to find the product that they were looking for in an online way and deliver that product to the small business owner in as little as 24 hours. So here we are 8 years later. We've lent out just over $1.5 billion across the Australian and now New Zealand economies. We've reached almost every industry and state and territory within the regions we trade in. And we've built a very sound foundation, a very deeply connected business to the small business community. I like to think of us as being big believers in small business. At Prospa, we really do put our money where our mouth is and support the goals and the aspirations of small business owners with working capital to help them bring their business dreams and ideas to life. And it's a really deeply satisfying business to be involved in. We have over 200 employees now in multiple cities in Australia and New Zealand. And yeah, we take a lot of pride in the role that we play supporting the small business economy.
Yeah, I love the work you're doing, and anyone who who really puts SMEs at the heart and works to help them is, in my opinion, is doing something really valuable with their time. So, congratulations. As I mentioned, we've got 6 questions we're going to walk through. Really, we're trying to help people understand in these difficult times how, and given that it's a new financial year, how do we help them think about constructing a cash flow forecast and business model that they can execute with this uncertainty. So let's sort of push into that. If people have questions, they can put them into the chat at the bottom of the Zoom screen there. You'll see a Q&A, not the chat feature, the Q&A. If you can put any questions in there, and we'll come to those as we can. And there'll also be an opportunity at the very end for Q&A as well. So let's start with the basics of a good business plan. What do you think the basics of a solid business plan are?
Yeah, sure. So a business plan is probably the most important, almost fundamental component to actually building a successful business. I'm a big believer in planning. I think it's one of the most overlooked and misunderstood things that exists in business. And many business owners, and I've been guilty of this myself, in several businesses in the past, you've got a great idea for a business, and often it comes from a personal experience where you see an opportunity or you see a gap in a market that you want to then go and do something about. And many business owners don't take the time to actually write down their thoughts around this. And there's plenty of business planning templates that are available online, but at the heart of a business plan, it's answering some pretty fundamental questions to what you want to be as a business. So I like to think of a business plan as a combination of the strategic choices you're making and some of the activities or the activity sets that you think you need to get on with in order to achieve your objectives. I really like business plans that start with winning aspiration. So what are you actually trying to solve? What do you want to be when you grow up as a company? And that doesn't have to be a startup. It could be, what do you want to be next year? What do you want to be over the next 3 years or 5 years? So really start with that fundamental aspiration. Then digging into components around things like your purpose and your reason for being. Looking at things like your market and your customer. So who are you actually going to solve a problem for? And is that a temporary problem or is that a permanent problem? I think one area that a lot of confusion comes up in business planning is the difference between a product plan and a business plan. Often companies are solving, or businesses, and particularly startups, are solving a product problem. But a product should just be one part of a business plan. And many great businesses, and the greatest of all, will actually have multiple products that they take into their markets. So really deeply understanding the customer, who you want to be targeting, what you want to be, your value proposition to those customers. And then understanding in the market in which you want to play, how you win in that market. So if you're an Italian restaurant aspirant and you're going to open a new restaurant on an eat street, knowing what does the competitive landscape look like is very important. So are there any Italian restaurants on that street? If so, what do they do really well? All of this needs to be thought through and documented. Some of the other components of a business plan that make a huge impact, and I believe are very critical, are considering the organization's design. So how you think about the team, the structure, how you think about the go-to-market, and how you're actually going to take your products out there and find and win customers. I use a philosophy with customer acquisition and retention being find, win, keep. So that should really form a core component of the plan as well. How will you find, win, and then keep and retain your customers? And then finally, and perhaps most importantly, how will you fund the business? How will you fund it this year, next year? How will you take advantage of opportunities that come up throughout the life of the business? And that includes things like cash flow forecasts and financial projections. and actually building out time and space within your business plan to cover them.
Yeah, great. You've covered a lot there, and 100% of it I agree with. In fact, yesterday I just caught up with an ex-colleague from Employment Innovations who had a new idea, and so I went and caught up with her and her husband, and they were telling me all about the product and pretty much everything that you just said. I had to sort of step them through, you know, why, how, and don't get to product until you've got a business model that says it's worth building the product in the first place. And I think so many people get attached to the idea of the product and don't do that background work. But a couple of things that we might share with people, and I'm sure they're already aware of this, is that book that I think is so important with business modeling and business planning, which doesn't involve any numbers at all, is Start With Why by Simon Sinek. You know, unless you're deeply passionate about what it is that you're building and understand why you're building it, then you're not going to have the grit, the determination to push through the inevitable tough times. Secondly, The Lean Startup by Eric Ries. If you're going to do it, it's a bit hard with an Italian restaurant. You're kind of all in on day one. You've got to have a viable product on day one, but there's plenty, pretty much every other solution that you can test very cost effectively before you throw, you know, a mortgage at it. And lastly, I think a really good way of exploring those concepts is the business model canvas, which is a very simple template, allows you to just scribble out ideas in and fill all the boxes because the boxes are in that template, and it really forces your thinking through each of those stages. And strategizer.com is a fantastic tool with a free business model canvas that you can use. So yeah, I couldn't agree more. And then the last point is, you know, is finance, which how are you going to do it if you don't have it financed? You know, you've got to get to that point. So we might launch a survey now. I'll get Julia, who's standing behind, keeping this whole thing sort of moving, to launch our first poll. The question is, do you have a business plan? So if you can let us know, that would be helpful. And whilst you're completing that, we'll move on to the second question, which is, you mentioned a cash flow forecast. Can you tell us what it is and what should be included in a cash flow forecast?
Yeah, sure. So I think the fundamental premise of a cash flow forecast is pretty broadly understood by most business owners. The technical design and build of one is a different thing. So at its highest level, a cash flow forecast is, and the way I describe it is looking at the money that's coming into the business, the cash, not the profit, the cash that's going out of the business and what's left over. And that's the simplest way to think about cash. Now, if you think about any business, there's only a small number of ways you can actually bring cash into a business. Obviously, there are sales. You can sell your product, and I always think of net revenue, not gross revenue. So take off the cost of sale there, and that's the net cash, if you like, that's available to run the operations of the business. That's one way you can bring money in. The other way you can bring money in is through issuing shares in your company, so equity, and selling a share in your business, and that brings cash into your business. Or you can raise capital through debt, and that's another way to bring money into business. So there's actually a very small number of ways. From time to time, you get things like government grants and some support from different places when starting up a business, but there's actually a very, very small number of ways to bring cash into a business. On the other hand, there are dozens of ways that cash can go out of a business. And I think one of the components of a really strong cash flow forecast is to deeply test and understand the cash that's running out of the business. In business, and whether you categorize your business in a services business or a product manufacturer or technology business, there are very, very common ways for money to go out. So we spoke about cost of sales. You know, use the Italian restaurant as an example. You've got to buy pastas and you've got to buy all kinds of different inputs that go out. Just about every customer that we deal with here at Prospa has got some type of cost of sale. And really understanding the assumptions around that is important. So what can you sell the product for, and what is the margin you can have as a markup? And that's a very, very important part of a cash flow forecast, because that gives you that net in. Money going out, though, can go out in ways such as payroll. It can go out in taxes. It can go out in all kinds of bills that have to be paid, and those bills sometimes have to be paid up front. Sometimes you get trade terms. But there are a lot of different ways that the cash can go out. And a cash flow forecast is trying to marry those two things up. What is the timing of money that's coming in, and what is the timing of money going out? And each week or each month or each day, whatever works for your business, it's a critical thing to be looking at to see what's coming in, what's going out, and what's left over. And invariably in business, there are moments where you have more money coming in than going out, and that's a great thing. There are also moments when you have less money coming in and a lot more going out. And businesses are experiencing that in some instances right now with many of the lockdowns that are being experienced around the country. So a cash flow forecast can sound very simple as a concept. Everyone who's in business understands the importance of cash, but spending the time to actually design that technical side of what's coming in, what's the net margin, and what's going out is very important. And the one thing I implore all business owners to consider is, do you have the skills yourself, or can you learn the skills yourself to do this? And if you can't, that's completely fine. Hire someone who can. Work with your accountant or bookkeeper, or if you're a large enough small or medium enterprise, hiring someone into the business that can do that effectively could literally be the difference between life and death in business.
Yeah. And just so important, understanding the timing as well. Given that most of us work with small business and medium-sized businesses, I know that one of those topics that has always come up in the 20 odd years that I've been in business is the timing of payment of invoices by large companies. I know that it's front and center in the news at the moment, this voluntary program by large businesses to sign up for paying small businesses quickly. But getting just that wrong, expecting that you can send an invoice with a 14-day payment term and that it's going to get paid within 14 days is a critical error that many people make. Have you seen much, or have you had much input into the payment side of things from big business? Do you see that?
Yeah, we definitely do. I think across, and it's not just unique to the Australian economy, it's actually almost a way of operating for many large companies, either due to their own systems or just due to the size and scale of those businesses. They do take their time to pay small businesses. And it's a real challenge for many small business owners to manage their accounts receivable, because often you don't have the resources to hire a full-time account receivable person in your business. And this is a game where there's a lot of technology tools out there that can help small business owners manage and recover those payments that are due to their business. We're constantly surprised by how few small business owners actually set up some automation around things like invoice reminders. Now, most cloud accounting platforms, such as Xero, Reckon, Mob, etc., these days have that as a standard feature to send an email or an SMS when an invoice is due for payment. Simplifying payment as well for your customers and making it easy to send you money, not just directly, but through payments such as accepting card payments from your customers is a very important part of bringing cash flow in. I've got a mantra in business, which is the faster you can bring cash into your business, the faster you can get on with growing. So anything you can do as a business owner that accelerates the cash into your business, the more your cash balance is going to go up and the more you'll have to do new and interesting things with. Yeah,
definitely. Okay, so there's a few questions, Beau, that have come in. A couple I can see here that I can easily knock off, and then a few that could take us down a rabbit hole. Do you want to address some of those now, and then we'll come back to the remainder at the end? Are you happy with that?
Yeah, absolutely.
Cool. So, David, you asked what are the two book titles that I mentioned, and also I've got to talk about the results for the survey. But the two book titles that I mentioned, David, were Start With Why by Simon Sinek and The Lean Startup by Eric Ries. And the website I referred to was strategizer.com with the business model canvas. So there's someone here that's anonymous. Should I get an accountant on board before I start my business? When is the best time to reach out to someone to help with this? Do you want to take that one, Beau?
I like to think of the very first hire or appointment I've made in any business I've ever started is a bookkeeper or an accountant. So obviously when you're starting up, you're not going to put someone on your books full time, but certainly finding a trusted advisor like an accountant or bookkeeper very early on can really help. And you might think it's a bit strange because in the early days of a business, you don't have a huge amount of revenue, or your banking transactions are pretty simple in those early days. But setting up the good practices in your business from the start, it'll create habits. And so many times when business owners are not chasing accounts that are owed to them, or not making payments on time, or don't know how to do a cash flow forecast, it's because it isn't a habit that they built very early on in the days of the business. In Prospa, when we founded it, was myself, Greg, and one investor, one board member. So there were three of us in the business, and we had monthly board meetings, and we produced our own board accounts. They might have been 3 or 4 pages in the very early days because there was so little data going on in the business at the time, but that created a habit. It created a pattern of the way we would operate. So I would definitely recommend finding a good accountant or even a bookkeeper to assist in those early setups. And then in terms of looking at this question about where to start in terms of the process, if you've got the business plan, you've got the cash flow forecast. You almost can't do the cash flow forecast without the business plan, because you need to understand what are the choices that you're making in your business. And then you can start to think about the investment or the costs that those choices are going to take. For example, if you've got 2 employees and you want to hire 2 more, let's say the average wage for those roles is $70,000 a year. That's another $140,000 a year of cash that is going to go out of the business, plus potentially payroll tax and other things that you need to build into the forecast. So getting the business plan and your choices around that right is the most important part. And then engaging with a bookkeeper or a accountant to help you build a cash flow forecast is the second part. It doesn't take that long, by the way, to build a cash flow forecast. It's not that expensive. It might be $1,000 or maybe $2,000 investment in the early days of a business, but it's probably some of the best money that you'll ever spend.
Yeah. I would all too frequently, maybe every couple of months, I'll have a new idea for a new business model that I'm interested in. And I will start with a blank spreadsheet, and then I'll put 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 across the top, which represents the months of the year, and how many customers I think I can win on day one, how much I can sell for, what the margin is, and then just build it out and just spend hours. And then usually within a couple of hours, I've either satisfied myself that it's got legs and I should run with it a little further, or I've convinced myself very rapidly that this is a crazy idea that doesn't make money. But that's where you start, is just sit at a computer with an open spreadsheet and try and put the numbers in there. You don't need complicated equations. You just need, basic maths. And on the accounting one, it's same as Beau said, earlier the better. I bless my lucky socks that my bookkeeper, Sharon Angove, who has actually worked for my group of businesses longer than I have. She used to work for my dad as a bookkeeper, and the first person I retained was Sharon, and she has basically does all the things that I'm not good at. And that's another way to look at it, is where is your time best spent? Because if you're not if you can find a better bookkeeper than you are, because you're great at cooking Italian food or great at coding, spend your time doing the thing that you're great at and let somebody else work on the thing that you're not good at. So unless you're a bloody great bookkeeper, you better get one, because they're worth every cent that you pay them. Okay, I think we've done that. We'll come back to the remaining question there, Beau, at the end, I think. Okay, the survey results are interesting. Given we're talking to business owners, where what we're seeing is 46% of people do have a business plan and they believe that it's effective. 20% of people didn't have one, but it's not effective. And then the remainder, which is 25% basically, don't have one, don't believe they need one, or they're not sure. So the majority of people on this webinar either have one or don't have one, and if they do, it's not effective, which is a bit scary, really. You'd hope that the vast majority would have one and believe it's effective. Any other observations on that, Beau?
Yeah, I mean, it's not surprising in some regards because we've all run businesses. We all know how time consuming the operations of a business, the thing that your business actually is doing, can be all consumptive. And making time to plan, reviewing the plan on a monthly basis or a weekly basis, how we're tracking against the metrics we set out to achieve. It's a difficult thing, and the smaller the business, the harder it is. But ironically, the smaller the business, the harder you have to work to make time for planning and to really be reviewing, is the plan working or not? So yeah, it's great to see there's a large percentage there of viewers today believe that their plan is effective and it's in place. I always like to challenge my thinking around effectiveness and review with questions like, okay, well, if I had to get 10 times bigger next year, is this plan going to do it? And invariably the answer is no, because the plan's designed to deliver a certain level of growth. Now that might not be your aspiration. Your aspiration might be to get 20% bigger next year, and that's okay. But always stretching the imagination and challenging the inputs, the assumptions, the components of the plan can be a really empowering thing, and often can bring up an idea for growth or an opportunity that you didn't even consider in the current plan. So well done to those that have got a plan and are feeling like it's a really effective plan. Sit down and have a think as well. If you want to get 10 times bigger, what would it take? It could be quite a fun exercise to do with your team and your shareholders as well.
Yeah, it is a fun exercise. We call it Project Zero. Add a zero to everything in your forecast and figure out how to get there. Okay, question 3, Beau. We might move on. It's no secret that positive cash flow can be quite hard to achieve in the best of market conditions, but with everything going on right now with COVID and lockdowns, multiple lockdowns, and sorry to anyone in Victoria who's dealing with that, what are some strategies that SMEs might consider to improve their positive cash flow?
Yeah, it's a really good point, Ben, that it's a very difficult time for so many business owners. And obviously the most recent increased lockdowns in Victoria is really concerning to people inside and outside of Victoria. So echo those thoughts there, and well wishes for everyone down in Victoria. I mean, positive cash flow can come in a number of different ways. I think at the moment, many business owners have taken quite a large hit to their revenue, and in some cases they're taking a double whammy, which is a hit to revenue and a hit to margin at the same time. And I spoke a little bit earlier about the importance of margin. Revenue is a vanity metric. If you're not keeping an eye on that margin is all the dollars you have really to run the business from. So when it comes to increasing your cash flow, or trying to drive a more positive cash flow in this kind of environment, I'll come back to the money in, money out concept. So there's only a small number of ways to bring money in. There are dozens of ways for money to flow out of a business. So I always go first and foremost to money out, and really hone in on those lines of cash out of the business. And in some cases it can be simple things like requesting rent relief from your landlord if that's appropriate for your business. It could be requesting extended payment terms to a supplier. So instead of paying at the end of the month, can I get an extra 2 weeks or 4 weeks to pay, etc. It could also be renegotiating contract terms. And I think one of the things that many business owners are just starting to recognise, but I really implore people to accelerate this, is to consider where is the opportunity to renegotiate the cost base of your business. So there's a range of different ways to do that, and there's some really well socialised ideas, such as working with the landlord to reduce your rent, but working with suppliers. And if you're buying a product that you can mark up for 40%, is there a way to buy that product so you can mark it up for 50%, as in you buy it 10% cheaper? Now's the time we're starting to talk to multiple suppliers. Those people that have been waiting in the wings, trying to give you a better deal. Well, let's go and put some conversations in place and see if we can reduce the input costs of the business. So my focus always goes to the outlines, because they're big, they're numerous, and it's amazing just how much flexibility there actually is on many of those outlines. For many business owners as well, payroll is one of the largest outgoings in a business. So in this kind of environment, obviously looking at what government support is available, Programs such as JobKeeper are out there, which is a wonderful program to try and support employment in this country and keep employees attached to their business, the business they work for. Anything that you can do there to try and mitigate and control your payroll costs is very important. And again, I think many employees inside businesses are very grateful for having a job at the moment. They're very supportive of business owners. Everyone picks up the paper, they can see how difficult the environment is. So there's a lot of goodwill and willingness for employees to work with their employer, working on reduced hours, taking slight reduction temporarily in wages to try and help the business through. There's a range of different ways you can control that as well. And then, finally, just in terms of money in, looking for opportunities that might come left field. And Prospa, we've got some wonderful examples of this up on our website, on our blog. You can hear sort of really inspirational stories of businesses during this really tough time that have thought quite innovatively about how they can adapt their business, find new sources of revenue. So, use the Italian restaurant again, that might not have been doing home delivery, but now engaging in home delivery, building family size, takeaways, that can be picked up on the way home from work. There's a whole range of different ideas that when you, again, put your mind to it, talk to other business owners, talk to people even outside your industry, you may find there's some really innovative ways to bring more sales into the business. So it's no surprise it's a difficult time, and cash is king in business. So anything you can do to be agile and bring that new revenue into your business is worthwhile, but keep a really, really close eye on that money going out of the business.
Yeah, excellent advice. And look, over the years, we've looked oblivion in the eye many times. It's part of running a business where the oh shit moment. And one of the first things we turn to is, okay, well, let's just take out 10% of every cost, divide up the P&L. Every single expense line in the P&L gets allocated to one person, and they get given the job of reducing that expense by 10% or more. And, within a couple of weeks, you look back at the P&L and you've got 10% lower cost base, and it wasn't hard to do. That is an exercise that you should be running all the time, just to keep the fat out. Really good advice. Okay, so there's a few more questions there, and thank you for the people who have submitted those questions. We'll come to them in a minute. I wanted to keep moving though. If cash flow is restricted or limited, how can business leaders stick to their business plan and continue to scale? And I think actually I might weave into that question, Beau. An anonymous person has lodged this one, which is, thanks for the insight, super helpful. Just make a quick question about the motto, spend money to make money. Do you think this is true? Struggling right now between spending and defensive saving. So if we can combine those two questions, do you need to spend money to make money? And also, if cash flow is restricted or limited, how can business leaders stick to their business plan and continue to scale?
Yeah, absolutely. It's a really difficult question to analyze, because when you think about a business plan, the whole idea is to obviously review the business plan on a frequent basis, which might be monthly, quarterly, or annually, whatever works for your business. And modify it based on the trading conditions, the economic environment, the opportunities that emerge. So this is going to be a very personal decision, I think, for many business owners, that you may have to modify your business plan even temporarily to take account of the changed economic environment. I like to think of the economic environment as things that have structurally changed versus might be temporary or cyclical. And I think it's very important in your business to analyze, is your business impacted in a structural way or in a temporary way? And if it's a structural change that's happened, so for example, you might have a business where your business revenue has dropped by 25%, and the source of those customers is not coming back because of the change in workplace environment or whatever's happened out of this crisis. You've had a fundamental structural change in your business. So if you went and updated your cash flow model, you could take 25% revenue and it would have a devastating impact to your P&L off the back of that. So it's very important to ascertain the difference between a structural and a temporary change. Again, you might be a business owner that's in a CBD location where many large businesses have not come back into the CBD. So there's lower foot traffic through the CBDs of Australia. Therefore, sales and that are under pressure. But if you're able to look at that and see through and actually believe in 12 months' time, businesses will be coming back and there will be more trade coming through, and this is only a temporary impact to the business, then you may not have to modify your plan as much. And it might be more a financial management plan to get through the next 6 to 12 months, as opposed to a permanent change that means you need to modify your plan. So really analysing what has shifted, forming an opinion and a belief. And it's a judgment call you have to make as a business owner. Is it structural or temporary? And then figuring out what that then means for your business. The motto of spend money to make money, it is very true. I think in business as a general philosophy, you'll hear this in investment markets. You need to actually be invested, spend money, buy the investment in order to make money, like dividends and share price growth, if that's the asset. So the motto does make sense, but it doesn't mean reckless spending. And there are moments and times in business, and for many business owners, they're experiencing this right now. I think the term was defensive saving, or cash maximization might be another way to think about it. There are moments in business where it makes sense to batten down the hatches, to really control that money going out of the business, and build up your cash balance. I always like to think of crises, and similar to you, Ben, we've been through plenty, both in this business and other businesses. It's just part of being in business, right? It's tough, and there are moments where you think, will I make it through or not? I like to think of moments in crises. It's all about survival to thrive. So survive to thrive is probably a more important mantra in this sort of environment than spend to make money. You can always spend if you've got the money at the end of the crisis or towards the end of the crisis. But if you've spent it throughout the next 90 days, it's gone. And it's similar to raising equity. If you've sold some shares in your business and you've brought that cash into the company, you can only spend it once. And you'll be really careful where you allocate that investment. So it's a really, really personal decision that business owners need to reflect on. You don't want to just head down, blink and think there's nothing that's changed in my economic environment, because it has. For many businesses, it's creating opportunity. For some, it's creating a real structural change. And you need to reflect on that and adapt the business plan to the new circumstances facing your business.
Yeah. Such good advice, and so well articulated, Beau. The only thing I would add to that is another good book worth reading for anyone that's interested in business is Anything by Jim Collins, and he's written about 5. Good to Great was the first one, but in one of the more recent books that he wrote, he speaks about the race to the South Pole, and this sort of approach of this daily march. And I'm saying that because I'm trying to remind myself the title of this particular book. But one of the chapters there is all about firing bullets before you fire cannons. So even if you are trying to conserve cash, it doesn't mean that you can't run short, sharp, cheap experiments. And if they work and you get the right signal back from the market, then to double down and actually spend some money on that opportunity. So don't stop innovating, don't stop running experiments, just do it really smart and affordably, so that when you do hit the target, you can go after it with a high degree of certainty. And that's probably the final point on this is, I'm a sailor, so I always see strategy as a race course and how you can get up there. And sometimes if you've got high conviction that there's a good patch of breeze out to one side of the race course, then it's worth ducking away and getting over there as quickly as you can if you really believe that it's going to give you a strategic advantage. Like don't be stuck in your lane. If it's not working, feel free to break away if there's a better alternative, even if it means spending a little bit of money. But that's my take. So we've got another poll question now, which we will launch, and the question is: are you concerned about your business cash flow past September 30 this year? Obviously, at the end of September is the end of JobKeeper. The banks were saying that forgiveness and mortgage forgiveness would end at the end of September. So a lot of entrepreneurs with mortgages, I'm sure, would be worried about that happening. Although I think the banks announced over the last few days that they would extend forgiveness in certain circumstances. So there's I think for all of us, we realize that the end of September is a very critical time for business in this country. We'll just give that a couple of minutes to finish populating, and then we'll come to those answers. Did you have anything else to add, Beau, just while people are still answering that?
I think the comment on Jim Collins's books are definitely great reads. So Good to Great and Built to Last are two phenomenal books. I've taken a lot out of them. And probably just another couple of books. It sounds like I've got a few people that are interested in things that might be good reads or useful. There's a great book called The E-Myth. And for anyone who's thinking of starting a business, so you're not in business, it's too late if you're in business. But if you're a listener today and you're thinking of starting a business, The E-Myth, it's a great book. It really will open your eyes to what running a business is all about, and some of the myths, if you like, about being an entrepreneur. So really great book to go into business eyes wide open. And then there's another book that I've taken a lot out of called Playing to Win. And it's written by A.G. Lafley. It's a really great read on business strategy. Goes into a lot about business planning. It's definitely applicable for businesses that are a little bit more mature. So you probably want to be 3 years old, sort of into a really good rhythm, thinking about the strategic choices you can make as a business owner. But Playing to Win is another great read. Highly recommended, and it's certainly given us a lot to think about in terms of frameworks for strategy and business planning.
Good. And I think the title for the book I was referring to is Great by Choice, by Jim Collins. But I wouldn't read that one until you've read Good to Great first. It really is, and Built to Last. They're both fantastic books. All right, so the responses are back. 63% of companies are concerned, respondents are concerned about cash flow beyond September 30. 28% no, and 9% uncertain. So like many of us, I think that's fairly reflective of the business community, that the end of September is going to be a pivotal moment for the economy, and we'll do everything we can to help you all through it in any way we can. Okay, next question. Are there any areas that SMEs often overlook that can immediately free up some cash for more strategic initiatives?
Yes, there's 3 areas that pop to mind, and sometimes they seem really obvious, but implementing the processes in your business to bring these to life can often be the challenging part. So some of these are temporary, so but in this environment, I think it's very important to think about how you can free up cash flow. The first is to look at your accounts payable and the terms that you're receiving from suppliers and just everywhere. If you can extend your terms from 30 days to 45 or 30 days to 60 days, for example, that is 1 extra month of cash flow. And if your accounts payable on a monthly basis was, say, $100,000, you can have a dramatic increase in cash balance in your business just by shifting your trade payment terms. The second is to look at your accounts receivable management and processes. Now, this will vary business by business. An example of a restaurant, there's not really accounts receivable. You just take sales as the customers come in. But for many businesses in wholesale, in professional services, building and trade, you run on an invoicing basis. So you invoice for work and then you collect once the work is complete. Looking at your processes around that is very important. And I'm constantly surprised by the number of small business owners that don't have automated setups in relation to managing the accounts receivable. There's some really cool tools out there. A platform that we've done some work with at Prospa called Easy Collect is a great example of an accounts receivable management platform. These are not expensive tools, and they can do a lot of the heavy lifting for you when it comes to working on your accounts receivable book. And then the third idea here around boosting your cash flow is to look at ways to borrow against your cash flow. And it's something that many business owners, particularly in the small to mid-size, are unaware that there are options out there that you can use. And Prospa is an example of this, where you don't have to put the family home or hard assets on the line as security. You can actually use the cash flow of your business as a way to access capital to boost your cash. and then take advantage of these opportunities that come through. So it's not the domain of just big businesses that can access cash flow funding. It is available now for small businesses, and it's a relatively straightforward way. There's lots of different options and products out there on the market, but it certainly is a way to boost your cash flow so you can take advantage of those strategic initiatives.
Yeah, great answer. And I think that just relates to a additional question here in the chat, which is, from your experience, can you please recommend some cash flow applications that plug into Xero?
I mean, there's a number of different tools. In fact, Xero have got a great marketplace with a range of different tools. The thing to reflect on, and again, this is where a trusted advisor like an accountant or a bookkeeper can help you pick the right tool, is, are you looking for an analysis tool? Are you looking for a planning tool? Are you looking for a payments tool or an invoicing management tool? So there's a range of different products. If you haven't seen the Xero marketplace, it's pretty easy to find it. And there's a wonderful set of categories of different types of product categories you can look for. And again, just tapping into what is the problem that you're solving there. And you might, when you talk cash flow management, you might actually find it's invoice management that you're looking for that would help you improve your cash flow. And there's a range of product plugins that are on there. The thing I'd say about Xero in particular is that they have a very high rigor of due diligence when products are looking to access their marketplace. So most of the products that are on there, and there's several hundred now, high value, they're really awesome to work with, and they all plug in and play. Most also will do things like a free trial or a 30-day trial, so you can test them out, see what works for your business. But I would definitely be speaking with your bookkeeper and accountant to figure out what is the problem you're actually trying to solve when you refer to cash flow management. And you might find that steers the right product choice there to plug in. The other cloud accounting platforms will have similar types of options as well. So if you're not on Xero, if you're on Myable or Reckon or any other platform in that space, most of them will now have many tools that can support the analysis, the invoice management, the payment collection, and a range of other options.
Yep, good point. And Intuit QuickBooks Online as well as a great platform with plenty of plugins as well. And I think that answers one of the other questions in there around technology that will help with cash flow. So thanks for that. Okay, so a couple more questions remaining, and then we'll just get into the Q&A. There's a couple of questions lined up there that we can come to. Are there any areas that, oh, sorry, we've actually covered that. So finally, are there the three key takeaways for those watching today? What are the sort of the essence of your business knowledge that you would pass on today for our watchers?
Well, hopefully my passion for business planning and cash flow forecasting has come through. That would definitely be tip number one. You have to make the time to plan, and it is hard, but it can be done. And really understand the different types of cash flow forecasting tools that are out there. And again, if you're not a numbers person, that's completely fine. Many business owners are excellent at their trade, and that's why they often go into business. Just make sure you are working with someone who is a trusted advisor that can help you with that cash flow forecasting, some of the best money you'll ever spend. The second tip or key takeaway is around being agile and adaptable. The fact that 2/3 of business owners are worried about their cash flow following September, says that now is the time in July to start thinking about how can you adapt? What do you need to change? Do you have temporary business interruptions, or has there been a structural shift, which means you need to radically rethink how you organize your business? Back to business planning, they're intimately linked. Don't be blinkered with a business plan. It's completely fine to open up and try new things, but be using this time right now. Don't wait till the 30th of September to think about it. Use the next couple of months to really analyze what do you need to change and adapt. And then finally, we've spoken a bit about trusted advisors. And we have referred a lot to bookkeepers and accountants, but there are lots of other sources of advice out there for business owners. There are local chambers of commerce. There are different forums online. There are plenty of resources available. Employment Hero, I've got a bunch of them. Prospa, I've got a blog as well. Other service providers out there like Xero, I've got really great content and insights for small business owners. So really making that time to learn, to develop, to really reach out and understand the different sources of advice that are out there. Now's not the time to do it alone. And if ever there was a time for us as a country and a team of business owners to come together, it's now. So really thinking about where can you get advice and support from, and don't be afraid to ask for help. Again, don't wait till September 30. Now's the time to get on the forefront, and you'll be surprised out there just how many people want to be helpful, and where great ideas can come from.
Yeah, great points. On that note, I just wanted to open the last poll for everyone on the call, which is just to get your feedback on today's webinar. We do have the opportunity to continue speaking with business leaders like Beau and Brett from JobAdder a couple of weeks ago. And just keen to understand from people on the call today whether that's something you'd like to see us continue doing. We're very happy to invest in that and continue bringing you thought leadership from the best that we can find. So if you can answer that last poll, that'd be great. Now, Beau, we might just spend a few minutes on these remaining questions in the Q&A. If you are on the call and you haven't asked a question but would like to, please just drop it into the Q&A. So I'll just run through from the top. And this one is a bit of a rabbit hole. What's been the biggest learning for you as business leaders or business owners during this time? I'll let you kick off, Beau.
Sure. Plenty of lessons emerge. I actually think the greatest lessons can happen during a crisis like this. I think the biggest learning for me has really been around the importance of team and culture as you're coming into to something like a crisis. You can't build a team culture or a wonderful environment for people to work at during a crisis. That's too late. So again, it's a great reminder and a lesson for me that investing in our people, investing in our processes, and the culture of our business well in advance of anything like a crisis like this happening pays huge dividends as you're coming to deal with situations like this. There's probably just a little second learning. I've banged a lot on this call about cash flow and the importance of managing it. Again, it's just a reminder when you have really difficult moments like this in an economy to always be on top of your cash. There's a classic saying that revenue is vanity, profit is sanity, cash flow is reality. I like to think of cash flow as that's the way you can sleep at night. If you understand what's coming in, what's going out, what's left over, it's such a critical component to success. So I'm not sure if it's a new lesson or just a reinforced lesson, that one, but it's a great reminder that the cash really is almost everything in a business, and really understanding it and preparing for it and knowing that position in advance of this type of crisis can get you through them.
Yep. The only addition I would make to that is what we've tried to do throughout this whole period of COVID is just answer one question that we ask ourselves, which is what's the best thing we can do to help our audience, our target customer, and that is a SME employer. And then we just said to the team, just do anything you can do to help. And one of my board directors said, Ben, whenever you are acting from the heart, then you will always be repaid, for any effort that comes from the heart. And that is happening. We're here to help SMEs. We're doing our best we can to help SMEs. And I feel like that is a great position to start with, and the rewards will come from that. So that's been really instructive. And secondly, just gratitude for how lucky we've been. And I keep reminding the whole team that we haven't had to lay anybody off. We've been very lucky, but acknowledging that there are so many people out there doing it really, really tough. And just to begin with, as thinking of the employees, those people who are locked up, who are social animals, who would love to be out there, spending time with friends and family, and they can't do it. that is, it's heartbreaking that people are in that situation. So we have to do whatever we can to get through this as quickly as possible. So that is the first one. Just to come back to the poll, 96% of people, thank you, said that they would like to continue this series from business leaders. So I'll take that as a confirmation that we will. Thanks for the feedback. Beau, another one specifically for you is Prospa doing anything differently during this time to support SMEs owners with funding?
Yeah, we certainly are. So as I mentioned at the beginning, Prospa's a very broad, or has a very broad reach. We have customers in every state, territory, region of Australia, and almost every industry. So we've been working very closely with industry to find the right levels of support. We've provided relief to something like 5,500 small business customers who required things like deferrals or part payments, or just a break for a short period of time to help get through this crisis. We've also worked with the Australian federal government, and we've been able to access some money there through a government guaranteed scheme where we've launched a new back to business loan product and a back to business line of credit product. Those products are products that don't have any repayments for the first 6 months of those products. So it's a wonderful way to bring capital, cash into your business today, and you don't have to start making payments here in July now until 2021. So we've been very, very diligent, looking at lots of different ways to support the small business economy, both for our existing customers, but also for many new small businesses that haven't dealt with Prospa in the past. And it's something that's, the core of our beliefs are that we are big believers in small business, and we want to do everything we can to support as many of them across the economy and get through this unprecedented time. And when we get to the side of this crisis together, really have a great foundation for rebuilding and growing once again into the years ahead.
Great. Another one for you, mate, is it good practice to renegotiate your loans with your bank, or look at another bank with better fees? Or maybe somebody who isn't a bank?
Yeah, it's a good question. I mean, it's in business, and in particular commercial lending products, they're a little bit different to home loans or credit cards or very simple products like a car loan. So commercial products are quite varied by the features of them. And the first starting point I would be looking at in any business is, what is the business requirement? And start with that. Do you need a loan product? Do you need a revolving line of credit product? Are you doing a capital purchase? For example, buying a piece of equipment that you're going to amortize over 5 years. Do you need a product that you need a quick turnaround on? You might have been bidding on a piece of work, a contract, and might be a $40,000 contract, and you need $10,000 to get that contract started, but you haven't budgeted for that cash flow. So do you need the money in 48 hours versus you've actually got 4 months until you need the money? So start with what your business needs, and then you can start to explore what are the products that are out there. The vast majority of commercial lending products are now available online, or at least the information for them is available online. So if you jumped on prospa.com, for example, you can read about our loan products, our line of credit products, and really get a good understanding for how they might work for your business. And in terms of renegotiating fees or interest rates or the terms of your loans, it's always a great idea, I believe, in negotiation to scan the market, to understand what your options are. There are certainly trusted advisors out there, whether they're accountants or finance brokers or a range of other people that you can use for this as well. And just get an understanding of what products would be available for your business, how would they be structured in terms of cost and terms. And most of these products are either free or very low cost to apply. And you can get an answer usually pretty quickly.
Yep. Thanks, mate. Now we're just over time, but there's just two, we'll do quick fire answers to these. Joe has asked, what do I need to watch out for shopping around for invoice factoring for construction contractor customers in a cash stretch thanks to builders paying late?
Yeah, this is quite a common thing that can happen, not just in the construction industry, but many industries where there's a central customer who's got lots of other customers and they're not paying or getting paid on time. With respect to what to watch out for, it's looking at the risk, if you like, of the breadth of, or reliance upon, if you like, of those customers to that one builder. So if that one builder made up, let's say 50% of that customer's revenue, that's going to be quite a risky proposition. Whereas if it was 5% of their revenue, if that builder collapsed, well, okay, they've still got 95% of their revenue. So that's the main thing that I'd be looking out for there, to understand how much reliance does that customer have on that one source of revenue. And if their revenue is diversified, it's likely to be a lower risk. If it's highly concentrated, then there could be quite a significant risk, and you'd want to tread carefully.
Great. And then the last question was from somebody who's working on a startup, but they're working full time. The business doesn't have their undivided attention, and they're struggling about whether or not to pay for an accountant at this stage. Should they wait or do it right away? I'll jump in and say, look, if you're pre-revenue and you don't have a lot of invoices and the bookkeeping side of things to do, you don't need that person yet. But if you're still questioning whether or not the business is viable and whether you should jump ship and make it your full-time career, and you want a second opinion, then it's probably worth finding somebody who is, business savvy, who's an entrepreneur, who understands, a P&L, just to talk them through the opportunity and get some second, third, fourth, fifth opinions on whether it's the right thing to do. And if it is, and you think it is, and you're fully committed to it, then, once you start earning some revenue, I would be looking at a bookkeeper to help you with the administration of the business. That's probably the approach I would take. Beau, anything else you'd add there?
I think, yeah, just echo all those comments, Ben. And I think if you're still working full time, you're very lucky in the sense that you've got a permanent source of cash flow coming in. The minute you give your job up, unless you've got revenue and you've got margin in your business, then that income stops straight away. And it's just, like I said, lots of ways for money to go out of a business. Even if you're pre-revenue, there are still lots of things you'll find ideas to spend money on. So while you've got some income coming in, maybe allocate $500 a month for the first 2 or 3 months to just getting some good advice. You never know, as Ben said, that second opinion might actually tell you it's a great idea or a terrible idea, or at least steer you into a direction that asks the next question that could push you into a whole different direction. Yeah.
Don't pay for critical advice. Go out and ask for it and get as much of it as you possibly can, because it's valuable and it's free.
It's a good point. Yeah. If you pitch your business idea to 20 people, you'll get 20 different opinions, and you might just find the golden bit of news that you're looking for in there as well. So yeah, if you're starting up a new idea, share it with people you trust and whose opinions you value, and that, you'll get lots of insight on whether or not it's a good idea.
Beau, thank you so much for participating today, and thank you sincerely for the work that Prospa is doing, the risks you guys have taken to create a better source of capital for Australian small business than New Zealand small business. It's a really, really valuable addition to the Australian entrepreneurs and small business market that you guys have put together, and it doesn't come without risk and hard work and I'm sure a lot of grey hairs, although you don't seem to have any on this camera anyway. So thank you to you and Greg for what you've given the country and the SME community. Thank you to everybody who's participated today. We really appreciate the support. And anything else you'd like to add there?
No, I think just thanks once again for the opportunity to share our insights and thoughts on what is such a critical piece of information for business owners around particularly planning and cash flow management. At Prospa, we're obviously really proud of the work we're doing. It's great to support Australian small businesses and Kiwi small businesses. Mentioned we're big believers in small business. We're playing a very important role here. It's not lost on us how difficult this moment is for the Australian economy and Australia's small businesses. So if you do have working capital needs, if you've got an idea and you're not sure if you've got the capital to bring to life, You can always reach out to our team. As I mentioned, it's free to apply, and advice, or at least some guidance is free. So jump on prospa.com or have a chat with one of our team members. You can call in at any time as well and speak to. Thanks once again, Ben. Really do appreciate the opportunity, and yeah, great to be a part of this series.
No worries. Look forward to catching up with you in the not too distant future, mate. Thanks very much.
Absolutely.
Ciao.
Thanks again, everyone.
Bye.